All right, awesome. Yeah, so basically why I wanted to have you on was kind of to share like why people need disability. I know the fact that like 1 in 4 people become disabled, but like how do we create urgency around people getting disability insurance?
Yeah, and that's it's really tricky because most of us, I think people can imagine that time almost of dying. And so life insurance seems to be something that people are more comfortable. Nobody wants to think about dying, but somehow they're more comfortable with life insurance. It also doesn't hurt that given somebody who's in their early 30s, late 30s, life insurance costs quite a bit less than disability. And it's because the likelihood of the disability is that much higher.
Interesting.
And, and so it's the contrast of I know that it costs a lot to have homeowners insurance here in Florida, but
Yes.
I don't like it. But I
Yeah.
understand that it's a risk because there's hurricanes and floods and all that. So the
Yeah.
life we don't do a good job necessarily of explaining how disability, as you said, 1 in 4 people, the statistics are 1 in 4 people before age 65 or before they're done working are going to have something that keeps them out of work for a period of time.
Hmm.
And there's lots of graphics and ideas that insurance companies do. We looked at one time that said, what if you took a 3 month vacation? Most people say, well, I couldn't afford to take a 3 month vacation. Well,
Hmm.
that's really what a disability is. And so we're using that disability coverage to cover any period of time where whether it's 6 months, a year, 20 years. Um,
Yeah.
and I think so sometimes one of the things that create the urgency is that for single people, it's much more important than for a couple. Um,
Right.
if you there's no second income to fall back on in that household if something happens. And I love my parents, but I went to college and I did not want to move back with them.
Yeah. Totally. What do you have to say when people are like, "Oh, well, I pay into Social Security and disability."
That's it's like you've seen some of my webinars before and know how to tee up these questions. It's
Oh, no,
wonderful.
actually, I haven't. These are literally real questions that I get. I'm like, "Well, you're only going to get like $700
Right,
ish.
right,
Like, can you live off of that?"
right, right. The amount that people get from Social Security is very small, especially the fewer years you have working behind you.
Yeah.
And the qualifier to get it is so strict that it usually, and I can't remember exactly, but it's something that you're expected to not be able to return to work really ever, or that this disability is going to end in your death. Um, and so it's not for, using my example, a 3 month, 6 month, I was diagnosed with prostate cancer or breast cancer. I can't work for a while I recoup, but I
Yeah.
fully expect to return back to work. Social Security doesn't cover that. Most people actually have to hire attorneys because it's declined so many times initially.
Wow.
So there's a lot of hoops. Sometimes I think I read something that it's maybe 1.5 years or almost 2 years between when people file the first time before they ever get that claim. And that's a lot of things can go wrong if you don't have a paycheck for a year and a half.
Definitely. Yeah. Actually, my stepbrother was in a major motorcycle accident, and I don't think he was working at that time. So, him just living off of Social Security right now, like that's
Right?
not ideal.
No.
But yeah, so I'm glad that you touched on that subject because even I didn't know that in regards to like getting diagnosed with breast cancer and Social Security is not going to cover it, or you
Right.
have to fight for it at least.
Right. Right.
Um, One other topic that I wanted to cover was the topic on having whole life insurance or having insurance for the rest of your life because people don't think, well, if I'm not going to use it, then I want to be able to get some of my money back.
Right.
And, being in the financial industry world on the broker side, it's a little bit different. People kind of try to push it a lot.
Mm-hmm.
But now that I'm on the fee only side, we have people like you, that could share like, hey, this isn't an investment vehicle.
Right,
So like
right.
what do you say to those people that like really think it's a great idea? They even have it for their kids. What do you have to say about that?
Um, well, let's talk about the first thing that we normally do look at first when you have new clients and we start talking about life insurance is term life insurance.
Mhm.
Term life insurance is like the rest of our all of our other insurances, our homeowners, our auto, our health. It's there, I pay for it, and I hope I never use it.
Right.
And so that's always kind of one of the arguments I use. I don't ever say, I really hope my house burns down this year because I've been paying these premiums all these years. No,
Yeah, no.
I hope it's money that I never have to use. And so term insurance really is that. It's a low premium for a lot of death benefit if I'm going to die in a certain period of time or that term, which
Yeah.
we usually tie to uh, working years, kids getting to driving age, getting kids out of college.
Mhm.
Sometimes we even tier policies so that you have a lot for the next 15 years while kids are young, and then it tapers off as we get closer to retirement.
Mm.
With the idea being that I'm paying a low premium over here for this death benefit protection. And with everything else that I'm not paying for, that's going into my retirement assets.
Yeah.
Whole life insurance, universal life, any sort of permanent life insurance is sort of smushing those two together.
Mhm.
There are insurance expenses. There is some form of investment component because I'm not going to have the coverage just the next 10 or 20 or 30 years. It's going to be there for my whole life.
Right.
And sort of like there's not a fuel efficient Humvee out there or a Prius that really, can tow your 40-foot boat. When you try to make something do lots of things at the same time, it might be okay at both.
Mm.
But for retirement assets, saving money you're going to use, your investments are there. The term insurance is the death benefit. We don't have to go back too many years where before the internet where people could, had 401ks, IRAs, 529 plans. You really had, you could put money in your bank account, you could buy CDs, and you had your life insurance. The average person had very few savings vehicles. So whole life, that was one of those things, and it's
Mm.
still just continued that way.
Mm.
And there are some times where permanent life insurance does make sense. We talk about estate tax planning, which
Yes.
is not, right now it's not most of us. There's there's estate planning, which is different than taxes, which is how do I want to leave what I have to my beneficiaries, where maybe you have a child who runs the family business and a child who lives somewhere else, in an RV. You may want to
Yeah.
say, I want to leave them equal, treat them equally, but I don't want to give them both half the business.
Mm.
That's where most of your money is. So it can be used for estate planning. At my death, I want these things to happen.
Mm.
Again, maybe assets can do that as well.
Yeah.
There's special needs trusts where especially if there's two parents, as long as one parent is alive, they're covering all those costs of care and doing all the care for special needs child. But if they're not both there, they may need assets or money to have that child live with a sibling or pay for care. Um,
Yeah.
but for most people, when we talk about life insurance, I really do think that term insurance for my income replacement, that catastrophe if something were to happen to me in my working years, and then all the rest of my assets or my discretionary cash flow is going to retirement assets and savings,
Mhm.
then I'm not sort of separating out both to maximize what each of them does.
Yeah. I like that. I'm glad that you brought up the like special needs and like the estate planning stuff because I haven't really thought about that actually. So, the child that is, not working in the business and how can you make it fair? That's that's really cool. I didn't think about that.
But and again, those are we review an awful lot of permanent life policies that people have. that don't fall into those categories.
Hmm.
So, I'm a big believer in term. I have an awful lot of term. It's layered to different things. One is to when I think my oldest is 17 and driving,
Yeah.
because I figure he can drive his sister around to school, and
Yeah.
we'll see.
Yeah. Yeah. I like the whole tiered idea as well. Like my husband and I just have one term policy each. So just interesting creative concepts in regards to life insurance. Um,
When you do insurance all day, you have to find things to make it interesting, because
yeah, I
it's
guess so.
people aren't calling me every day just to, let's, talk about insurance.
Yeah. So you started this business, right? Is
So,
this your company?
so actually, Judith Maurer, who I call mom when we're not in the office, started
Uh,
it about 25 years ago. And
Okay.
20 years ago in July, I joined the firm.
Oh, okay.
So two Mauers, but yes, so I've been here almost 20 years doing this, and just really, really enjoy it, and sort of in this conversation or this topic, we do an awful lot of reviewing policies people have, and trying to sometimes repurposing where their premium dollars are going, and from the whole life to maybe some term and retirement assets, and
Mhm.
people who still have credit card debt or aren't maxing out their 401ks for their employer match,
Mhm.
but they're contributing to these whole life policies. Many times we feel like they're missing some really important things in that retirement plan that can really shore things up.
I see. Um, well, any other things that like I should be aware of, especially starting. So I've been in the industry for 11 years. I worked at JP Morgan, started at Waddell and Reed, working on the independent side. So
Mm-hmm.
then now I'm like a startup RIA, 4 months in. Like anything that you would share, especially for people that are like in their 20s and
Sure,
30s that should be aware of disability and life insurance, or I don't
sure,
know,
sure.
any
So
tips?
yeah, yeah, and I touched on it a little bit, and I think especially if we're going to 20s and 30s, single people, definitely
Yes.
disability.
Okay.
Little to no need for life insurance, and unfortunately, again, that's something that I review sometimes. Why is this person paying $6,000 a year for a variable policy when
Hmm.
he has no kids, no spouse, no partner? Well,
Hmm.
he was told it was a good investment.
Right. So they can use
Okay.
it in retirement.
Right, right. But there's life insurance expenses. There's charges for it every month. So
Yeah.
so when you're young and single, definitely disability, so you don't have to move back in with mom and dad. Life
Okay.
insurance, not much.
Okay.
Newly married couples, newly together, definitely disability.
Hmm.
But now the probably the need for each is a little bit less on the disability because there's two incomes. Life insurance, still not a whole lot. Maybe if you have a mortgage, shared debts, things like that. But for the most part, before we had kids, if something had happened to me early on, my wife would have probably gone, "Ooh, wow, I should have dated around a lot more in college. Look at what's out here." And she'd be better off.
Oh my gosh.
And but and then once you have kids, now you have somebody who's dependent on you for the next 18 slash,
Yeah.
as many stories as I hear, 40 or 50 years.
Yeah.
So now disability again becomes just as important, because if you don't have your income,
Hmm.
you can't save, you can't pay for the health insurance, you can't, it's almost a pyramid of everything that you plan for. At the very bottom is your income.
Yeah.
Going to predicate everything. And now life insurance, there's a big jump. So I'm sort of the opinion, until you have kids or maybe are starting to plan for a family, and
Hmm.
maybe want to go ahead and get some ducks in a row before
Yeah.
you aren't sleeping and those sorts of things.
do,
It's
do
not,
you feel like that's the best time? Is that the
yes.
best time to get disability and life insurance? I guess when you're starting to plan or when you're ready to have kids? Or like when do you think's the best time to get life insurance when you're ready to go that way?
Really, most of us don't get healthier as time goes on. None of
Mm-hmm.
us get younger as time
Mm-hmm.
goes on. So the sooner that I think people sort of have that general plan, or like you said, we're wanting to have a family in the next year. Now is a good time. Get those,
Get it in
start
row.
having those plans because you're still young, you're still healthy.
Yeah.
Um, just you never know what's going to happen in the future. Disability, same idea. There's insurance companies even for people who are in their medical residency. Some
Mm.
insurance companies say based on your particular residency, even though you're only making 30 or 40,000 right now in residency, we know you're going to be making 200, 250 soon. So they can offer disability, really large amounts of benefits
Mm.
based on your future income, not
Interesting.
your current one, but you get to
Mm.
lock it in while you're still young and healthy.
Oh, that's kind of cool. I
And,
didn't know that.
and as far as so disability is really kind of an anytime thing. Once you have that income, uh, life insurance, or like I said, until if it's not anything you're necessarily planning for as far as family goes, maybe just that baseline to cover debts, things that you might look for is a nice floor.
Got it. Well, awesome. Thank you so much
Of course,
for sharing everything. I appreciate that. And
of course.
too bad we don't have an audience here to ask you a bunch of questions.
I love questions. Let's see. I'll make up one more.
Okay.
Mark, how much life insurance do I need?
Yes.
Oh, somebody asked how much life insurance you need.
Yeah.
That's a great question. So like we talked about, sort of with really kind of without kids, it's that debt. What is something that would help out that spouse? But then once you have kids, my general rule of thumb is that people need a minimum of 10 times income. That, for the most part, is not going to set a spouse or partner or the other parent up to live. Again, if we're talking 20s and 30s, it's not going to set them up as if they never need to work again. You're not at 10 times earnings. You're probably talking 30 years of income.
Mhm.
That's going to pretty much prevent catastrophe. And
Yeah.
then insurance companies have scales that say at different age brackets, you're eligible for 20, 25, 30 times income. So the younger you are, the higher that multiple of income is.
Mm.
And that's where like we talked about, I like layering or tiering that coverage to say, here's some while the kids are little, here's some that gets them through college, and here's some that it gets me out to 65 or retirement age. So if something happened tomorrow, there's 3 million. If something happens in 29 years, there's a million, because the year before I retire, I don't need 3 million like I do
Yeah.
today.
I like that.
That was a fantastic question. Whoever asked that was,
I should have asked that question. Yeah. So there's a needs based, like you can look at someone and see like how much they actually need. Do you
right.
guys do that? Like a needs based analysis, or usually the financial advisor is doing that?
Yeah, because we don't necessarily have all the details of the
Got
the,
it.
the
Yeah.
clients. Maybe their assets, and I know some advisors who factor in what they think they might get from their parents if
Mm.
their parents are in their
Yeah.
88 or something like that. So
Yeah.
we don't have that level of detail.
Yeah.
So, but everybody knows what their income is. So those are my very you
At a
know,
minimum.
sort of you've got a min max sort of in between there, and then
Mhm.
advisors ask me, does this number look right? I say it's between here and here.
Mhm.
It looks good, and you know one of the things I tell people is you can do the needs based analysis, and you say I want to send all 18 of my kids to Harvard and pay for it and do all of these things. Well, if you make $22,000 a year, you can't qualify for $18 million of life insurance.
Yeah.
So that pyramid, whereas my income really, how big your pyramid is depends on how big
Mhm.
your income is, and sort of the same thing with the life insurance. The income replacement makes it so that you're not worth more dead than alive.
Yeah.
Into a
Exactly.
Road or Agatha Christie novel where bad things are happening to you.
Yeah, yeah, yeah. You have like a bounty hunter against you because you're worth so much.
That's right.
Um, how old are your kids?
15 and 13.
Oh, nice. I have a 2-year-old.
I, uh, everybody says something about terrible twos. I love twos.
Oh,
Twos were fun.
yeah. Some days are easier than others. Today, I was like showing her her clothes. And I'm like, okay, do you want to wear this, or this? Throws them on the floor. No, it's just whatever she wants. Like then she'll do it. But if she doesn't want to do it, then she doesn't do it.
Yes. Oh,
But it's fun.
the day they learn the word no is that's a day.
Yeah, exactly. Um, well, that's like all I have,
Okay.
unless you have another question that you're like, oh, I should have asked that.
No, no, that was, I wrote down some ideas and that pretty much covers it all for me. So if you had anything
Awesome.
else, I was happy to go off on any tangent you'd like.
Um, no, I'm happy. I really wanted to hear about like the investment side of insurance because I've just feel like I've been meeting so many people that just love it.
Mm,
Oh, and even the infinite banking, like that's a topic
right,
that people are pushing, and it's like I don't know if that's like the right way to go.
right. And
Um,
yeah, infinite banking, it the same idea, it recycles every few years. There's infinite banking, be your own banker.
mhm.
There's books on it called, I think, Missed Fortune, and just whole ideas, and really just the idea is that you don't even contribute to your 401k, you take out home equity loans uh, to put all this money into life insurance.
Mhm.
And so the parts of life insurance that are true, you can put the money in, it grows on a tax deferred basis. You can take out tax free withdrawals, you can take out tax free loans,
Mhm.
you can leave a tax free death benefit. So a lot of times there's even programs out there that call it a super Roth or
Yeah.
things like that. I always get really nervous when you compare something to a qualified plan.
Yeah.
Like that's a little dicey for me. Um,
Yeah.
but just that idea of some of the parts of it are true like that. Um, but there is no free lunch in life, and there's those insurance expenses,
Yeah.
and part of it is also based on the projections of what's going to happen in those policies.
Mhm.
And just depending on the different types of policy, a whole life is probably going to be the most stable. Then you get all the way to an indexed UL policy that says it's tied to the S&P 500 with minimums and caps, but they can change those caps over time. And so the
Yeah.
illustration is at 11%, but variable UL, again, the money goes up and down, the sub accounts go up and down with the investments chosen. So
Yeah.
all of those things really, all of those parts are true. I think what is minimized many times is the insurance part, is that insurance charge, which if you look at it purely from an investment standpoint, the insurance the insurance expenses are a fee, an expense.
Mhm.
Many times they're not small.
Yeah.
And you may have surrender charges if you need access to your money for the first 5, 10, 15 years. It may be
Mhm.
maybe 10 years before you break even.
Yeah.
So if you concentrate on the first part, here's some great tax advantages. Well, that's all true. It's just so many times in the details when people get 3 or 4 years in and say, I need some of that money because I was told I could use this like a bank.
Yeah.
Well, you've put in 60,000 and you can only get access to 22 without penalties.
Right.
Wait, I thought it was like a bank.
Yeah. And then you have to like, if it goes too low, then you also have to add more to it so it doesn't
Right.
get underfunded.
Yes. Yes. Once you start taking those loans or withdrawals in the future, you can't just set it and forget it. You have to make sure that the policy keeps performing well so that if you're continuing to take loans, you may need to adjust loans, stop taking loans.
Mhm.
Um, and I think that's a probably one thing that is hard with with our Roth accounts or our 401ks, nobody ever gets an illustration. It says, you put in $500 a month into your IRA, here's what it's going to look like every year. And people come back 10 years later and say, oh, that's what it's supposed to look like.
Yeah.
With illustration, with life insurance, you see those numbers go in, it projects out 40 or 50 years. And then people get to that point and say, well, that's what it was supposed to look like. Well, things just don't necessarily happen that way.
Yeah.
Well, thank you for sharing all that insight.
Of course. Happy to.
Thank you.
Like I said, I
right.
love to talk about insurance. It's just, I don't get a chance to every day.
Oh, well, great. All right, awesome. Well, I'll send you this recording just in case like you
Okay.
wanted to use it for any social media purposes.
Sure.
And
Great.
yeah, thank you so much for your time. And maybe we could do this again in a few months, like assuming if I get more people to join on the call. But
Sure.
I appreciate your
Absolutely.
time and I hope you have a good Memorial weekend.
All right, you too.
Bye.
Bye.